Good evening, everyone. Time for another silver update. This is the US dollar index provided by netdania.com. You can click on the link below. We're on the weekly chart, and you can see that we're beginning to roll over. The major downtrend line here is touched and turned down. Even more so, the steepness of the decline in the MACD. You can see the crossover has just occurred. So the dollar is now weakening. That's probably somewhat connected to all of the crazy NSA Snowden news that's coming out. We haven't seen the gold and silver markets really react to this. The gold has rallied a little bit today, relatively, but not much. You can see that it's still very, very low, just below the 1400 mark. As a lot of people have pointed out, that's kind of a magnet for it. So gold is rallying, but is unable to get across that 1400. Silver is even more dead, and of course that's related to the belief that silver is determined, the price of silver is determined by deflation expectations. Of course, we know that's all phony, but we do have a nice little rally that's starting after hours here. You can see silver is going to try to tick up to that 22 level. Now, of course, when we get out to the weekly, the very long view, we can see that silver is at the most oversold that it's ever been on this chart back to 1995. And we're starting to round up here. Will we get an explosive rally? What's going to happen? I don't know. I think it's going to look something like this, but we'll wait and see. Gold is even more oversold on the MACD. You can see that it is absolutely ridiculously oversold. The only thing that even rivals it is the overbought condition it reached at that 1900 price. So we're still waiting for a turn. We're seeing the rounding. If we pull back and look at just the daily, we can see that it's trying to fight above that zero level and form some kind of a bottom. Of course, when we know the fundamentals and the paper rigging, we know that gold is way underpriced, and whatever gold is underpriced by, then silver is underpriced tenfold of that. Now, before we look at some stories, I want to take you over to the silver price. This is comparesilverprices.com, and the way you read this site is you look for the green. That's going to be the best price of that particular item, and you can see here. First of all, I wanted to point out with the junk at the best price is $17.67. That comes to about $23.50 an ounce. So where we're at with silver at about almost 22 on the spot price. So we're talking about $1.50 above spot for junk silver. So that's come down significantly from where it was trading when we first got the smackdown. Junk silver right now is probably the best deal that I've ever seen. The best deal for it is at JCS Gold. You can see that there's a very close one here at Liberty. APMEX is quite a bit higher. Now, if we look at the others, and these also show you, if you look at the green, you can see the percentage above spot premium, and that's the blue. And it's really kind of neat the way they're graphed as well. So you can get a good idea of what's going on. But you can see that for the Silver Eagle, we're still the best above spot is at 14%. And of course, if we look at gold or any other markets, then that's a ridiculous price above spot. But of course, we know with silver that it's so manipulated and that it's so in a shortage situation intermittently that it's not surprising to see that. Now, there is a decent price above spot for the bars. You can see that the 10-100 bars here, the best price is 5.55% above spot for the 100 or the 10. For the 100, you can get less than 5% above spot. Really, those should be around 2%. But again, silver is so underpriced that you're going to have to pay a decent percentage premium to get silver. That's just the way it is. Now, let's look over at some charts here. We already looked at the dollar chart, and that was a very ominous chart. An even more ominous chart here is a cross of the Dow and the 10-year note. Now, we're seeing in Japan a sort of blowback in the JGB and the yen policy. They have really crashed the value of the yen, and of course the response in the bond market was a rally in interest rates, and so that kind of backfired against them, and now the Nikkei, which has gone on a tremendous run, is starting to correct that run. But we're seeing something similar here now occurring. The red line here is the Dow Jones Industrial, and the blue line is the interest rate on the 10-year note. So you can see that the interest rate has ticked above this very, very key level, and I think we're at about 2.23, which is still extremely low historically. But we're starting to rally in interest rates, and we're starting to see stocks sell off. Now, ultimately, I believe these two lines are going to cross, and I don't know when that's going to be, but sometime in the near or relatively near future, we're going to see these lines converge, and that is going to mean an economic disaster as the value of people's investments begin to diminish, and the interest rates that they have to pay begin to increase. That's going to be a tremendous squeeze. And to show you how bad the situation is, even before the storm, and I think we are before the storm right now, this is a PDF of the latest monthly Treasury Statement. This was from Zero Hedge article, but I just went to the Treasury release here. And if you remember, we had the tremendously bullish release of the government's tax receipts in April, where they were telling us that things are so wonderful, that they took in so much money, that they didn't run a deficit, etc. But we can see now with the deficit for May, you can see that right here, that we're talking about a spending amount of about $336 billion for the month. And that spending was made up for by $197 billion in receipts and $139 billion in borrowing. So this is pretty much the whole story in one picture. It doesn't take a rocket scientist, a physicist, or an accountant to figure this thing out here. All you have to do is take this figure and add a zero. That's pretty close for a lot of people. So imagine this is your budget. So every month you spend about $3,360 for all of your expenses. That's going to be your mortgage, your rent, your food, your power bills and water bills, etc. That's how much you're spending every month. This is how much you're taking in. You're taking in less than $2,000. So every month you're having to borrow about $1,400. So you can imagine that if this were your monthly budget, how long would you be able to maintain this sort of situation without either increasing the receipts, which means a second and third job, or decreasing your spending? Obviously, anybody who runs a real household, who has a real budget, can't get away with what the U.S. government gets away with, which is counterfeiting. I guess if you had a printing press in your basement where you could print up this $1,400 a month every month, then you'd be fine. And that's pretty much what the U.S. government is doing. And apparently people believe that is going to be without consequence. I beg to disagree with that. I think that it's going to be with tremendous consequences. Unfortunately, I think all those consequences are going to occur at the same time. So when we go down to the breakdown, you can see the total yearly breakdown is here, and it's not much better of a picture, a little bit better, but you can see with 4 months or so remaining in the fiscal year, we're already at that $600 billion mark. So it's really not improving, regardless of what the government says. Now, you can see the receipts and outlays and deficit. I went ahead and added the months, and up to where we are in May, we've spent more than we did in May of last year. So the idea of austerity, if you remember the mainstream, government-controlled media trotted out some uh, statements about how austerity, or the fake austerity that they proposed, had had an impact on the economy. Of course, there has never been any austerity in the United States, and pretty much there hasn't been any austerity in Europe as well. And what I'm talking about when I use the term austerity, I'm talking about reducing this number here, total outlays. That has not happened. The government has not touched this number. It's only played around with numbers that affect these numbers. So the fundamental picture remains the same. It is horrific. It is a train wreck that's about to happen. I think we're seeing that beginning to be hinted at with the dollar index, as the dollar index begins what looks like a free fall collapse. And then, of course, that is accompanied by a rise in interest rates and a decline in the stock market. And of course, that is a perfect three-way storm that could mean outright disaster. And we're coming into the sell in May and go away season. So it looks to me like we're heading into the perfect storm scenario. I know I've been saying that for a while, but all the indicators are pointing to that. And of course, silver is at the lowest price it's ever been, especially for junk, in many, many years. So that's a great opportunity to stack silver. I encourage you to go to Compare Silver Prices or APMEX or Gainesville and look for the bargains that are available and try to protect yourself from what's coming down the pike very, very soon. And we'll talk to you next time.